Many of you have health insurance plans offered to you by your employer. You pay a portion of the premiums, your employer pays a portion of the premiums, and ultimately it's used to purchase insurance that you can use for you and your family for the medical and other health care costs that you incur. Oftentimes your employer will procure their insurance through a third-party insurance company. Some popular third-party insurance companies that you may have heard of could be Anthem, United Healthcare, etc. Pickerington Schools offered its employees third-party purchased insurance coverage through 2014. On September 1, 2014, the district instead went a different direction and decided to become self-insured. Self-insurance means that the premiums that are paid by the employees and the employer, in this case the Board of Education of Pickerington Schools, goes into a separate district-held insurance fund. This fund is then used to pay the claims that are incurred by our employees for the medical care of themselves and of their family. We switched to self-insurance in September of 2014 because of anticipated efficiencies and savings in cost that it would afford the district and hopefully its employees. The chart that you see in front of you shows the historical renewal dates for Pickerington's insurance plans all the way back to September 1 of 2002. In the second column, you'll see the initial renewal that was offered by the carrier, which for the Pickerington Schools in the past has mainly been Anthem, but has often been other companies such as United Healthcare. In the third column, you'll see a final negotiated renewal that oftentimes when a company will lead with what is in the first column, the district would respond and negotiate a lower overall increase, and that column represents the increase that ultimately was agreed upon. For example, if you look for the renewal at September 1st, 2002, the initial carrier proposal was 17%, but through negotiations, the district was able to get it down to 7%. The final column provides any notes from any unique or different circumstances that may have occurred during a particular renewal. Now take a look on the chart at the renewal at September 1 of 2014, and look in the third column where the note says that this is when the district began self-insurance. In that year, rates were actually lowered by 2.68%. In subsequent years, you can see the initial renewal, and then you can see ultimately what the district implemented as its renewal with notes in the final column. The renewal at September 1 of 2015 was brought down to 14.5% by changing deductibles and out-of-pocket maximums. The renewal at September 1 of 16 was flat. The renewal at September 1 of 2017 was 4%. The renewal at September 1 of 2018 was 10.1%. And finally, the renewal this past September, September 1 of 2019, was again flat at 0%, meaning there was not an increase in premiums to the employees or the district. If you look at the bottom of the chart, the average increase before the district switched to self-insurance was 8.69%. That means that on average, from one year to the next, our premiums were increasing at about 8.7%. After the district went with self-insurance, that rate has fallen to 4.32%. Additionally, if you look at the renewals that occurred at September 1 of 2016 and September 1 of 2018, there was additional bonus to the district and employees. In both of those 2 years, the performance of the fund was such that the district was able to issue what is called a premium holiday. A premium holiday means that for 1 month during the plan year, neither the employees nor the district had to pay its share of the premium because our loss fund, from which we pay our claims, performed well enough that we didn't need to make those payments. During the 16-17 school year, the district would have saved $1 million in a premium holiday that it did not need to transfer to the self-insurance fund during that plan year. And then in the most recent school year, 2018-2019, the district would have saved an additional $1.1 million in a premium that did not need to be paid in 1 month throughout that plan year. In those same plan years, the employees also during that premium holiday month would not have had to have paid their share of the premium either. We hope this provides an overall basis for why the district switched to self-insurance, and we certainly think that it has allowed the district to gain efficiencies. It has allowed the district to incur additional savings beyond the way we used to do things, so that ultimately we provide the best value for our taxpayers.